use and unlimited fund of human beings. Scarcity means that available resources are insufficient to satisfy all wants and needs. Remember, with absent scarcity and alternative uses of available resources, there is no economics problem. The subject does defend involves the study of choices as they are affected by incentives and resources transfer. They stay on how people choose to use our limited productive resources. E.g., land, labor, equipment, technical knowledge to product various commodities such as wood, beef, roads, and distribute this good to various members of society for here consumption is economics. In short, economics analyzes the production, distribution, and consumption of goods and services. It aims to explain how economics work and how economics agents interact. Macro and microeconomics. Economics can be best divided into its two main branches: macroeconomics and microeconomics. Microeconomics takes a top-down approach to analyzing the economy, while microeconomics take off assets, liabilities, and owner's equity to increase and our decrease during this space period. To have details of those transactions readily available and to prepare periodic financial statements easily that the the effect of transaction must be recorded in a timely and systemic manner. In fact, accounts used to books, i.e., general journal and ledger, to recording transaction of the business's enterprise. This is a step of accounting is called bookkeeping. To understand this base, I need to know what journals and accounts are, how they are used, and need to be acquainted with the roles of debit and credit. Accounts and ledger. Accounts and ledger. An account is the ways and which in transaction of a businesses are recorded. The account of company or continued in a book called ledger. Each account is a sheet of paper having left side of the account and the right side are called debit side and credit side, respectively. Regardless of the account title, amount entered on the left side of the account are called debit to the account, and the account is said to be debited. Amounts entered on the right side are called credits, and the account is said to be credited. Debit and credit rules. Debit and credit rules. The rules of debit and credit may be stated relative to the equation of accounting and to the format of the balance sheet. The results of revenue and expenses are based on the relationship of this element to owner's equity. The results of debit and credit for the 6 groups of the accounts are presented below. Normal balances of accounts. The results of debit and credit and the normal balance of the various types of accounts are similarly set below. It should be kept in mind that the side of accounts which received increases determines normal balance. Note also that withdrawal and expense accounts are recorded as a debit when increase because increases of the accounting represent decreases in owner's equity. Chart of accounts. Chart of accounts. A chart of accounts is a listing of all the accounts in the ledger and are very numbered to permit easy indexing and for use as a reference. Generally, accounts in the chart of accounts appear in the sum order indices in the right side of the equation are recorded by credits. This system is often called double entry accounting. Journal. All businesses transactions will never be recorded directly in the ledger account. In fact, in a real accounting system, each business's transaction is immediately recorded in the bookkeeping journal. The debit and credit change of the account are entered in the ledger account after transaction have been recorded in the journal. The journal is sometimes called the book of original entry. Science